Hi, this is Zak Mir with a Bitcoin strategy special here at Zak's Traders Cafe for Saturday, the 21st of June, the longest day. There's a couple of points to make before going to the charting positions of the stocks involved. The first is that just because lots of shares are rising doesn't mean we're in a bubble. It just means that we're in a bull market. That's one way of looking at it. And the other point is that I think with almost all these stocks that you're going to see, the charting has been spot on. And I know it's been spot on because not one person has said, Zak, you actually called these things properly. They tend to get in contact when you get it wrong. So 10 out of 10 in terms of that. Starting off with Bluebird, and here you can see that we had a falling trend channel, which was the first target there around 0.8. The initial setup was a bear trap island reversal, so gapping down last month and gapping up this month tends to be one of the strongest signals, and it has proved to be the case now. Second target was that red line there just at 105. End of day close above 105, and we're looking actually for 2.2 pence, perhaps as soon as the end of next month. Bullish divergence started the rally, and even though the shares are overbought at the moment, it looks as though above, or at least on the right side of a penny, we should be on our way for a new leg to the upside. Moving along to Coinsilium, which has, I suppose, been the second stock of the big Bitcoin Treasury strategy bull market, and here you can see that we've hit we hit several targets. I lost count how many targets there were, but I think we were starting off around 3, then we got up to 5.5, then we got up to 9, then we got up to 12, 20, which was sort of intermediate, and then above 20 I was saying 30, and then above 30 the best case scenario target at the moment, which is actually where the market closed on Friday, that red resistance line projection from way back at the end of 2017. Although you might think there's no way of working out where the shares are going up next, the upper parallel of that red line looks like it's going towards the 80 pence area, and we're looking for that by the end of next month, while we remain above recent support, which was around the 36 pence area. Ideally, obviously, the shares stay even on the right side of Thursday's peak, which was 45. That would be a great result if that was managed. Moving on to Cel AI, and here the position is that of a V-shaped bull flag. We've also already hit the top of the channel there from back in May last year, 0.61, above 0.61. Rather simply, we're looking for 0.9 pence again, hopefully by the end of next month or even sooner. Moving along to a situation which has been, I suppose it's, to my mind, the third best. Smarter Web obviously being the first, then Helium, then Coinbase, and then Helium Ventures. Here the shares hit a resistance line projection there from back in 2021. Obviously, the charting here quite theoretical, given that there's hardly any data. You're just literally trying to work out where the trajectory might be. But the upper parallel of that 2021 line, heading for just below 70 pence, looking for 68 pence by the end of next month. And we're looking for that at least while the shares remain on the right side. The previous target there at 32 pence, obviously Friday's low at 37 pence, a potential support point. But looking for further gains while we're above the low 30s and up to 70 pence, the best case on that one. Moving along to looks like a new entrant in the space, Hot Rocks, another Aquis situation. The market there on fire at the moment. It was sort of the Cinderella. It's now become the hottest place to be, for some people anyway. Here we've got Hot Rocks and resistance line there from way back in, looks like 2010 when we were all young. That's heading for 3.5 pence. And we're looking for that while we're above I suppose the halfway range of Friday, so above around 1.6, 1.8 pence. That's about the best we can say at the moment. Obviously, these things are rather difficult. In fact, that's Thursday's range. So around the midpoint of Thursday's range, 1.6 to 1.8 pence above that. Looking for up to the 3.5 pence situation. Great turnaround this week for Priority 1, which I think it deserved after the rather sticky start that we had back in December, January. Here, the initial target here, when we were off the lows, went basically at the 50-day line around 3.6 pence. We're looking at the top of that falling trend channel. 6 3/4, presumably by the end of this month. Can't quite remember exactly when it was, but at the moment, the current situation is to be broken above the falling trend channel there at roughly 7 pence, and the longer we stay above 7 pence, a chance to not only test the 200-day line, which I think I said on Friday rather, but also head to the top of that broadening triangle, the red resistance line there at 13 pence by the end of next month or sooner. The other point I think I said yesterday was that the shares haven't been above their 200-day line basically since they started, so would be quite a trend change there. Upside valid certainly while we're above or on the right side of 6 pence, but ideally we stay above 7 pence. On to the star of the show by some distance, which is Smarter Web, and the shares closing above the top of that rising trend channel that I drew just a few days ago. And the situation now, I think the company has, apparently somebody said on Twitter that the company has a market cap greater than Wetherspoons, which is a good place to celebrate if you've got the shares, I suppose. But in terms of the next level up, looking for the upper parallel of that rising trend channel, and that seems to be heading for the £7.80 zone. As you may know, if you've been following the calls up here, the stock has tended to outperform at every single juncture. At the moment, Thursday's high was £4.42. Above that, we're looking for up to £7.80 by the end of next month. Ideally, we stay on the right side of the top of that channel there, which is around £4.80. So best case would be that we stay above 480. Otherwise, a more logical and maybe a cooler retracement would be back to £4.42. But up to £7.80 by the end of next month could be on the cards there for the situation at Smarter Web. Moving along to a situation which has been brewing up nicely in the recent past. Here you can see Tao Alpha hitting the November 2024 resistance line, closing just near it, around 6.3 pence. Looking for the upper parallel of that, which I'm sure would delight some people, many people actually, if they're in the stock. And that looks like that's heading for the 10 pence zone. And we're looking for that by the end of next month. Ideally, we stay above the recent support there, around 4.5 pence, above 4.5. Maximum would be 10 pence, otherwise a retest of the recent resistance, 7.4 pence. Tap, not quite a Bitcoin Treasury, but I suppose might as well be. Here we've got the rising trend channel there from back in November, top of the channel there, up to 3.5 pence. That's our target for the end of next month. The stock has been slightly disappointing compared to other stocks in the space, but at least while we're above the bottom of that gap there from February at 2.25 pence, looking for 3.5 by the end of next month. And given the way that the 50 and 200-day lines are rising so sharply, one actually would be looking for much more. This was in line with the other stocks we're looking at, would be looking for 7.5 pence by the end of the summer. So hopefully TAP can step up to the plate, especially given that it's moving up to the AIM market. On to Tiger Royalties, where the great and the good seem to be very much in place here. You can see that we already hit our 0.26 target, which I was promising for quite some time. Next level up, 0.35, which we nearly did last week, and that means that actually we're looking for a fresh leg to the upside, and that would be the upper parallel of that red resistance line, and that's heading for the 0.5 pence area. Hopefully we can get to that by the end of July. Ideally we stay above the old target there, 0.25, 0.26 in the meantime. Moving along to another situation which was a bit of a laggard, but seems to be catching up now. Vinanz, you can see the shares hit the top, hit our target. You can see what's common here, that all the stocks have either hit the targets or outperformed the target. So that's around the 27 pence mark. And once again, we draw the upper parallel of that rising trend channel. That's heading for 40 pence. And looking for that by the end of next month or even sooner. Let's see if Binance can do that. The upside valid certainly while we're above the old resistance there from January at 22.5 pence. Finishing off with another stock where the great and the good seem to be piled in and making money back after the 3 years of giving away money to the market, 4 years I think probably. Here we've got Vault. The previous call was above 0.06, looking for 0.015, was 0.15 rather, and just adjusted that a bit. It looks as though it could do a bit better than that. The upper parallel, well, the top of that price channel, heading for 0.19, which is the best case scenario target for the end of July. What's also interesting is that we've had unfilled gaps to the upside. We've had 2 of them so far, and as you can also see, we are just a day away probably from a golden cross between the 50 and 200 day lines. The run up to a golden cross tends to be the strongest part in the cycle, so probably be nice to see 0.1 and above on Monday or Tuesday, and obviously the old support, but the old resistance becoming new support, 0.06. That's it for me today. More updates in a more usual fashion later in the weekend.